So this is the first year that we're using that Schedule 1A, and we have those 4 new deductions: the overtime, the tip, the interest on a new car, as well as that for those that are 65 or older. Well, here's the thing. When we're looking at the tip income, which provides that deduction of up to $25,000, it may not be available for all taxpayers next year, even if you qualified for it this year. You see, the OB3, which is the One Big Beautiful Bill Act, it went ahead and it provided some types of limits. One of the big limits that hasn't been getting much attention yet is that those that are SSTBs, specified services, trade, or businesses, are not eligible for that tip deduction. That includes employees of an SSTB. Now, because of this transition year, the IRS put out a notice that said, hey, we're going to allow these SSTBs to go ahead and to take that deduction this year. But after this year, and once the regs are finally completed on it, you're no longer going to be able to take that tip deduction if you work for an SSTB. So you may still have tips, you may still think that you're in a qualifying industry, but because you're considered an SSTB, that's not going to apply to you, and you're going to be paying taxes on the full amount of your tips, just like if Schedule 1A had never been passed. So here's what I'm going to do. I'm going to go ahead and I'm going to walk you through what an SSTB is, so that way you know whether you're employed by an SSTB. And then we're going to go ahead and look at some common examples of SSTBs, so that way you can see, okay, yeah, this is a type of business that I work in, and you'll know whether you're going to be eligible for that deduction once the final regs are posted and complete. So let's go ahead and see what an SSTB is. So this table is going to help us understand what an SSTB is, which is defined as a specified services, trade, or business. So the SSTB definition and understanding is really important, not only as we're looking at this video for the Schedule 1A tip deduction portion of it, but also for those of you that may own a SSTB, it'll impact your QBI deduction, or it may impact your QBI deduction, depending on what your modified taxable income is. And I have another video that deals with the QBI deduction, but the scope of this video is to focus on that tip deduction under Schedule 1A. So what's the core idea? What are we dealing with when we're dealing with an SSTB? So an SSTB basically is looking at it, and the code's basically saying, listen, an SSTB is based on personal services, right? We're not dealing with anything like the investment in a lot of capital assets. So because of that, we're really recognizing the skill, expertise, and reputation of the individual. Well, they're being compensated based upon that expertise and skill. So if you have a skill set and that you're operating this business, basically, if you quit working, your reputation is no longer there. Well, the business is not going to continue to produce profits. So that's basically what we're looking at for an SSTB. So an SSTB is going to go ahead and it says under the law that if you have an SSTB, then you're not going to get all these deductions, such as this tip deduction. Now, there's this transition year. So for 2025, in 2026, as you're doing your 2025 taxes, you're still going to be able to capitalize on this, but you need to start doing some planning for next year, because when you look at your deduction this year and you look at your taxable income and what's happening this year, that may not hold true for next year if those final regs are produced, because the OB3, the act itself, says SSTBs are excluded. So when you look at what your tax position is this year, don't rely on that for next year, because your taxes will likely be higher because you're going to lose this deduction if you receive a lot in tips. So let's look at some common examples of our SSTB, and then I'm going to give you another table that's going to be a little bit more specific on industries, so you can see whether you're going to be in an SSTB or not. So consulting, professional services. When I talk about professional services, what I'm talking about is medicine, accounting, law. Those are all going to be considered SSTBs. Now, granted, I don't know many lawyers and accountants and doctors that are given tips in addition to their wages or their bills, but they would be considered an SSTB, and that would be particularly important when you're looking at a QBI deduction. Creator businesses. So if you have a YouTube channel or something like that, well, that would be considered an SSTB as well. Hairdressers, entertainers, all of those are going to be considered SSTBs, which means after this year, any tips that you're receiving, as long as those regs are published, you're not going to be able to take that tip deduction unless something in the law changes. Now you can see where I have non-examples second to the bottom on our table. Well, those are going to be things, it's not services, right? It's going to be things like manufacturing, retail, capital intensive operations. So that's not based on the reputation of a specific person. It's not related to their expertise and their skill. It's different. It's a product that we're looking at. So those are still going to be applicable. Likewise, if you're working for a restaurant, you're going to be okay. You're still going to be dealing with the items. You're not going to be an SSTB for those services. So if you're a server and you receive tips, you're still going to be excluded even after the regs are finally posted on that. But again, this is extremely important because what it's doing is it's going to go ahead and it's going to impact your taxes after the current year. Now let's go ahead and look at one more table, and I want to go through this table and be a little bit more specific on industries that may be impacted in case you're. So we already talked about the professional services, attorneys, CPAs, enrolled agents, consultants. They're not going to be eligible as an SSTB after this year. Again, professional services often aren't given tips. So for Schedule 1A, it's not as big of a deal. For the QBI deduction, it would be a big deal. Health and wellness, doctors, dentists, chiropractors, therapists, those also are not going to be eligible because it's based on the reputation and skill of these licensed professionals. Creative services, so that's where you have freelance writers, designers, your editors, any of those things, they're not going to be able to get it because it depends on their personal creative skill. So a lot of times a creative service is not going to be eligible for these types of deductions. Content creators, so influencers, streamers, those types of creators, again, personality driven, so you're not going to be able to take that deduction. Performers, actors, musicians, comedians, public speakers, they're also going to be SSTBs. And then personal services, so tutors, trainers, personal chefs, babysitters. If you're receiving tips on those things, you're not going to be able to take that deduction because you're going to be considered an SSTB, which impacts your ability to take this deduction. Now, I do want to highlight again that this isn't just for the owner of the business. Obviously, the owner of the business, if it's an SSTB, so if you own a sole proprietorship, and you're considered an SSTB, you're not going to get the deduction. But you know what? Even your employees, if you're an SSTB, they're not going to get the deduction either. So you may be working for an SSTB and you may be thinking, hey, this isn't going to apply to me. It's kind of like a QBI deduction. Well, that's not true. This still applies to you as well. So it's important to become familiar with this because when you start doing your taxes next year, this is going to be impacted. So what do you do? How do you address this? Well, there's a few things. If you're somebody who loves to go ahead and get that deduction, right? If you love to get, not the deduction, but the refund at the end of the year, well, you know what? Maybe you have to go ahead and on your W-4, you're going to have more withholdings taken out throughout the year. Now, what happens on that is it's just impacting your cash flow during the year. And there's a lot of financial professionals out there that'll say, listen, you're giving the government a tax-free loan if you're doing that. And that is a true argument on it. But if you're somebody who relies on that, well, that would be your process to do that if you still wanted to get a larger refund. Or maybe it's not even to get a refund, right? Maybe you're worried about, am I paying enough taxes? So you may have to have more withholdings based on losing this deduction. So you're going to have to take a look at that to figure out how it applies to you. All right, if this video has been helpful, please go ahead and subscribe to this channel, and good luck as you continue to work through your taxes.